Well, let's get some more insight now into the European economy. Earlier, I was joined in the studio by Jim O'Neill. Amongst other things, the chairman of Goldman Sachs Asset Management told me that he thinks now is the time for an EU finance ministry.
In hindsight, I think the basic question is, as many skeptics said at the time, should all of these countries both chose and being allowed to so easily join a monetary union? And it looks in hindsight as though the answer is no, they shouldn't. Easy for me to say that, but can you just simply undo it and take some of them out? I'm not so sure that's such an easy and desirable choice either. So I'm also influenced by having been around this business for so long, is that we always are going to get crises, and the key thing is, how do you respond and deal with a crisis? And it's true for all of us as individuals, including our policymakers. And so in that regard, it could be that maybe some lasting good comes from this if the policymakers do things to make it a more optimal economic and monetary union. So that in some ways the choice is theirs.
Now, you've unfortunately said that the policymakers don't have a lot of imagination at times.
No, I don't think they do.
And you've also said that this isn't really a crisis about sovereign debt. It's about something much bigger.
Yeah.
What should they, in your view, be looking at?
I think they have to, and it's very unpopular in the likes of the UK, of course, but they have to seriously consider becoming even more central and more effectively like a union of states for the purposes of monetary union. How can you have a persistent and successful monetary union where all these countries' credits are treated differently? Right? And when I stop to think about the recent mess, I find myself reflecting back and thinking, why didn't they agree to a true common bond right at the outset?
You've said that before, but I mean, surely Germany right now is not going to want a common bond, is it?
It doesn't look like it, but they might not have any choice. I mean, when you look at the efforts that are by default coming anyhow, where we get bigger and bigger rescue funds, maybe that's effectively what this rescue fund is becoming. And if this thing isn't handled well, and we have Spain having trouble, and no doubt there has to be another boost to the rescue fund, and before you know it, in essence, that's what you've got. So it's tough for Germany, not least because of their own highly complex internal politics, but they've somewhere along the line, as is usually the case with matters European, Germany's got in particular some big decisions to make.
And what are the big bold steps that need to be taken?
I think to consider, as interestingly Trichet said a couple of weeks ago, a true European finance ministry, where you have some kind of central, effective, powerful voice influencing what is accepted into law in fiscal policy, which sounds horrible for anybody that looks at it nationally, but if you're going to go into if you're going into something you want to be a permanent monetary union, these are probably the sorts of things that have to ultimately happen.
Now, with all these crises and the ongoing issues in Europe, you might expect the euro to be a lot weaker than it is at the moment. It's in quite robust health, and that for a country like Spain that you just mentioned, that's kind of looking to export its way out of trouble. It's a big deal, isn't it?
Well, this is why it's important that policymakers do think boldly now, because guess what? As you go forward through time, the challenges are going to get even bigger, not less. As you've said, I mean, for some of these countries, trying to compete in this world with an overvalued euro, when you know, that's not exactly the thing that you'd want the opposite. If it's seen just from a European perspective, you'd probably want the euro in these countries at parity or less.
Indeed, what can they do though? I mean, at the moment, what can
they can hope that the US economy recovers dramatically, so the markets change the view about the US and the dollar in general starts to do better. They can hope that the ECB sees less reason to be tightening in the manner it's basically telling it it's going to do, but beyond that there's not a lot they can do. I mean, and then even beyond that you've got remarkable change in trade patterns going on. Germany itself is increasingly looking to China. Look at these deals that have just been agreed the past 24 hours and looking at the trade data. You know, China will probably be, at the end of this year, more important to Germany than anywhere else except France and the US. And then in another 12 months, it might be more important to them than either of those two places.